Welcome to the London Outlook for Wednesday, the 20th of March 2024. Starting off with the economic calendar, there's one red folder news event which will set the tone for the rest of today. The other red folder USD events are all subsequent to the end of our trading session and has no bearing on our trading. For that reason, we will consider trading based on what this news release is. Of course, if it's neutral, then we can trade both directions, but ideally, whatever it is, we'll trade based on that direction in accordance with the technical analysis narrative as well. So moving on to the daily chart, what you can understand is that yesterday was another bearish close day, and now we're sitting with 4 consecutive bearish candles, and thus it's highly probable that today will indeed be a bullish day. From a 4H perspective, we're still in an uncertain scenario because we recently changed market structure. Whilst we haven't confirmed the bullish leg, we have to operate under the instance that we are in an unconfirmed scenario. And then, if you recall, I have 3 requirements for this. It's a 4H OB to support any long or short idea. Then it's a substructure that's validated in order to be targeted, like this low or this high. And then lastly, it's internal range liquidity to move towards the intended target. In terms of where we are, there's reasons to both long and short. So I'm just looking at this substructure. This lower low, lower high, lower low. So actually, there's another substructure level right here, because this candle is higher than that low. And then obviously there's another substructure right here. Actually no, hang on. So this low was body broken there. This low was not body broken until this candle right here. But subsequent to the break, there hasn't been a pullback, which means this isn't really a lower low, it's just part of this one leg. Because ideally what you'd have is a body break of this, then a pullback. Here we got the pullback forming after the body break. So for that reason, this is the real substructure high right there, and then we've got the substructure low right there. And the last valid OB is this one, because this was the OB, then we body broke outside of the OB, we pulled back in, and then we came back down. So for that reason, this is the last valid OB to short. Everything to the left is mitigated until we get to the top. So again, there's reasons to both long and short, with the short objective being this substructure and the long's objective being this substructure. However, if we want to long, then we have to contend with this barrier in order to trade to the upside. So for that reason, what we do understand now from our technical analysis narrative is that the daily bias is long, and thus we are favoring longs. So in order to long, we need to validate in the current day that there is IRL. So we have this Asia low of the day and potential IRL right here. Once we body break this barrier, then we have available IRL to the substructure. And by body break, I require a 4H body break, after which it should be smooth sailing to reach the substructure highest. There's no valid 4H OBs in and around this area. So how are we going to find ourselves into a long? Well, one option, we certainly for one need that the GBP inflation rate needs to be positive, and if that is positive, then we can validate the Asia low of the day will hold. Obviously, we'll need one side of the Asia range to be broken first, so the Asia high must be taken out as such, and then we'll align our verb, anchoring it like such, and try and find an entry, with this being the first sort of target, and then this being the ultimate target, just because this is the last IRL point for this period. However, since we are in an uncertain scenario, we'll simply target a 1 to 3 at a fixed rate and not partial anywhere. So that's how we'll manage that. Alternatively, what could happen is that upon the news release, even though it's positive, we may have a spike down, after which we'll validate a Frankfurt low of the day with London, something like this, and then again we can consider entering in and around this area. Because it's CPI, it might be worth being a bit more aggressive. Obviously, if we have the Asia liquidity to target and we can get in at a 1 to 2 rather than a 1 to 3, we'll take that while still keeping our ultimate target at a 1 to 3. So that's option 2 is a Frankfurt low of the day with London validating the Frankfurt low of the day by breaking the range, or alternatively, provided that this breakdown is due to the 9 a.m. release. So the 9 a.m. release should cause the low of the day and then validate itself by creating a new leg by breaking order flow, and then depending on whether we have the Asia high to target, we can either go aggressively trying to position ourselves at a 1 to 2 in terms of the 70% of the daily range, which is currently about 48, which is quite far away, which is not ideal. So what we need to do is ensure that we can reach a 1 to 3 by the substructure high. So that's pretty much the London outlook. Just to summarize, high time frame narrative daily bias is too long. From a 4H technical analysis, we can trade both directions. However, it's generally not wise to trade against the daily bias, and thus for that reason we're only considering longs for today. I presented two options where longs can materialize. One being the London news wicks the Asia high and then validates that the Asia low of the day is likely to hold, in which case we'll also validate the internal range liquidity for why it makes sense to trade against the barrier. Alternatively, the London news is still positive, but it wicks down, taking out the Asia low of the day, creating a Frankfurt low of the day, and then the Frankfurt low of the day is validated after a chalk OB. And then once we have that, we can consider trading long with the objective of taking a 1 to 3 by this point right here. So a key time frame to monitor is the 9 o'clock open of Frankfurt. Other than that, I hope you have a good London session, and we'll chat again for the New York session.